Hello, this is Conrad Invest. Today I'll be talking about semiconductor stocks. So a simplified version of the chain is like this. So you have NVDA at the top designing the chips, you have TSMC in the middle making the chips, and then you have ASML making the machines to help to make the chips. And so if you look at this whole chain over here, the most critical one will be the backbone of this whole semiconductor chain, which is your ASML. A lot of these semiconductor stocks have been down almost year to date. And so is it now a good time for you to buy semiconductor stocks? So there are a few things that you need to consider before buying semiconductor stocks. So semicons, they normally have waves, and we've been on a downtrend ever since I think 2022. And so AI has sort of like saved all these different semiconductor companies, but it could be the one to kill it as well. So for these companies over here, they are extremely volatile and cyclical. You will always have opportunities to buy them because they'll always crash 20% and then go up 20% and so on. Next one is the China risk. And you also have Chinese competition as well. So let's talk about Chinese competition first. So I was speaking to a guy that had some SMIC exposure back in the day. And funny story, there's this other company called Global Foundry. So it was created years ahead of this company called SMIC. So there are only about 2 generations behind TSM. So don't underestimate the Chinese when it comes to the semicon industry. It is like the arms race back in the day, but in the form of AI. And if you saw what happened with DeepSeek, the Chinese, what they do is they'll keep everything silent, and then they'll pick a right time to just say everything out to show their strength. And so I expect that to happen as well in the future in terms of all the US technology. So the Chinese will be able to copy it, make it cheaper, make it better. So when it comes to all these US technologies like your EUV and your TSM technology as well, I expect the Chinese to catch up to it as well. So that's one risk in terms of competition. So if the US cannot continue innovating, then they may lose out to the Chinese as well. And so all these semiconductor companies, they will be hurt as well. So next China risk to consider is the China concentration risk. So if you look at a lot of these companies, you look at ASML for example, AMAT has 40% of its revenue from China. And that is after the US placed restrictions on these Chinese companies. So if the Chinese suddenly just stop ordering from all these different semicon companies, then their revenues will definitely be hurt a lot. So that's one of the risks that you have to consider as well. Last one is geopolitical risk between China and US, and then they just cut off the restrictions and all that. Then you could see all these semiconductor industries falling together because they rely very heavily on China now. Last China risk that no one is talking about is what if they invade Taiwan? It could be disastrous for this semicon industry. So with all the bad theses said already, let's talk about the bull thesis. And that is extremely bullish for all your different companies, including your NVDA, your ASML as well as your TSM. So if the US government is able to move all those overseas foundries to the US and keep the technology within US, then it is extremely bullish for all these semicon companies. Next bull thesis is just simply the semicon industry recovery. So apart from AI, all your different semicons have been on a downturn since 2022. And so AI sort of rescued all these companies and just normal smartphone chip making and all that. It could be extremely bullish for all your different semicon companies. And as for the best semicon company that I think you should own now, I think it is still ASML. Simply put it like this, ASML is the backbone of the semiconductor industry. If there's no ASML, there won't be any other companies after that. Next, let's talk about ASML. So ASML has primarily 2 business models. They have their net system sales as well as their installed base management. So under net system sales is when they sell all the machines. They have the EUV and the DUV machines. In the EUV market, they hold an absolute monopoly. They are 100% in it. And then in the DUV market, they own around 80 to 90% of the market share. And under the installed base management portion, what they do is they basically have people on site to service the machines. And so it's sort of like a recurring revenue business model as well. And it takes about 4 years to learn everything in terms of the machines. So if you think about it, the more machines that they sell, the more people will need to sign up for the installed base management portion. And if you think about it, all these machines, they last up to 30 years. And a lot of the 30-year-old machines, they are still sort of like remanufactured to prolong their lifespan. And so this only adds on to ASML's installed base management business model. It is an incredible business. So let's talk a bit about the valuation now. Okay, so let's talk about ASML stock now. So ASML has been down quite a lot over the past 1 month or so. I think from its highs, it's down around 10% already. So in the 2030 guidance, ASML projected around a 44 to 60 billion in net sales and 56 to 60% in gross margin. So I did some calculation over here. This is the estimates for the 2025 one, the one that they guided this year, and then the estimates for 2030 are over here. So as you can see over here, ASML now is currently around I would say between 5 and 10% undervalued. So Based on the 2030 guidance, if I were to use the midpoint estimate, ASML is around 10% undervalued. If I were to use the 2025 guidance using the middle range estimate, ASML is around, I would say, 5 to 8% undervalued. So as you can see over here, this company is doing, I would say it's quite undervalued right now. It's around 5 and 10% undervalued. Maybe if you want a greater margin of safety, you can wait for that as well, but I think it is an okay buy right now. So let's key in some numbers as well for ASML. So ASML over here has a 20.12 EPS, and then I think a 30p is more than reasonable for a business like ASML. It is a monopoly. It is a high quality recurring revenue business as well, so I think it's reasonable for that. And currently the stock price is trading at, I believe, $709. So the dividend yield is around, I would say, 0.89%. And so as you can see over here, ASML is around 10% undervalued. So if you're buying today, you can expect an 11% CAGR if I were to give it a 14% EPS growth over the next 5 years. Of course, if it grows out of these estimates, then it will be a lot more returns than just 11%. And that is what all the different analysts are projecting in the future as well. So as you can see over here, they're expecting the EPS to grow around, I would say, if I'm not wrong, it's around 30%, 20 to 30% over the next few years. So ASML EPS forecast. The analysts are quite bullish. They are forecasting that ASML's EPS will grow by around 20 to 30% over the next few years. So, okay, so over here, this year's estimate is around 25.17. So 25.17 divided by, you divide that by 20.12, which is their current EPS. That is around a 25% EPS growth just this year alone. So I may be a bit conservative with the 14%, but I think ASML now is presenting an opportunity that can get